What's up, everyone? Welcome back to the Mortgage Heroes Weekly podcast. I'm Andy.
Oh, I'm Brian.
And it is the two of... Wait, did you do your hair?
Yeah.
Wow, dude, when did you do that?
Yesterday.
I'm like trying to go to the show intro. I'm like, wait a minute, what's up with your hair? So for those of you who are just listening, something happened to Brian's hair. Do you want to describe it? Yeah, how about you describe it? Because I'm not going to probably be that nice about it.
So I got slapped, and all of a sudden I woke up and I had to cue the video right here.
If you didn't see on social media, Brian went to the barber with his regular hair. He got slapped in the face, and now it's whatever color that is. What color is that, bro?
We went for platinum, but it's looking like along like the lines of like gold and blonde. But we're gonna be working on it. We have a few tricks up our sleeves, and it might be a different color next week. So
I hope that you're. Yes, I definitely please work on it. So we are back, just the two of us, dynamic duo today. We are missing Will, as you can see for those of you watching. Will and Tanya are celebrating the new addition to the family. Their son Gian and Lola just had their baby boy, Giancarlo Christian Flores.
So
he's carrying on Christian's legacy and Christian's name by having it as his middle name and, of course, his dad's first name. So
for a moment, I thought you made it seem like Tanya and Memo had a new baby to the addition.
No. They're welcoming their next grandkid to the show. To the show, next grandkid to the show. Wow. No.
Hey,
their grandson just showed up. But awesome moment. So congratulations, you guys. Congratulations to Gian and to Lola and also to Will and Tanya. So, Brian, we have some stuff to talk about today. So we're gonna get right to it. Look, there's some issues with housing. There's some issues with issues, but positive signs, I think, for summer. Mm-hmm. I don't know what's going on with the whole buyer slump. So many of these things they're referencing this uncertainty economically.
Yeah.
And it's like, but I have questions about that. Because that's mostly a sentiment play. So let's start with the first thing that you shared this. You brought this up from Newsweek, and this is the housing market shows positive sign for summer of 2025 buyers, which we've been saying for weeks now. We're like, hey, get your pen. This is that thing where it's like, hey, we know that the tide is turning, behavior has changed. People are like going for it if they're ready to get a house. But I understand like the headlines are still like, oh shoot, no, warning signs, flashing danger, warning, caution. But look, this is saying even though the pace for growth has slowed, it's still growth. So again, when you read these articles and they talk about pace of growth has slowed, that doesn't mean it's turned and it's gone negative. It's just saying, oh, it was +5 and now it's +4. Yeah. Or it was +2 and now it's +1. So slowing doesn't mean that it's not still growing.
So I think a lot of this just has to do, again, with the affordability and people believing that, or just, knowing that things are very expensive for what they want to purchase for. Among all the information of the economy, geopolitical things, I think that just gets masked in between everything. But in reality, people are just feeling that it's still too expensive. And I think that's why maybe we see a little slowdown going into the summer. We didn't get that pop, at the beginning of spring like we were hoping we did. And, I'm not surprised by it, but at the same time, we do have better data. We do have more listings. There is more activity than last year. It's still just not what we're used to seeing as far as, normal real estate transactions year in, year out.
Well, but normal hasn't been normal for the last couple of years.
100%.
Everyone that watches this, we've been talking about that. They've heard that already story from us too. The thing here, though, is that it's still saying that there shows positive signs. Mm-hmm. I think some of those are the interest in people looking to buy a house, like we've talked about a lot. And then you have the millennials like yourself, and then the Gen Z behind you that are showing great promise because they're showing up ready to go.
Yes.
And they're not asking questions about what, why this, why that. They're like, hey, I need your help. I need you to help me just cross the finish line, but I'm already in. You don't got to sell me the idea. I'm already there.
Yeah, and I think right now it's, having the ability to capitalize on the market that is like in front of us right now. And I think the buyers that are taking those opportunities are getting the negotiations that fall into their favors. But a lot of it does come down from, people being ready. And I feel that when you're ready, you're more confident in what you're doing. Where as opposed to people that still are in those like, I want to buy, but I haven't really, done the math, budgeted it out and sat down with the professional to know what I actually, approve for. And I think that's the biggest differentiator here, where the people that are ready and they're actively in the market are seeing those opportunities, and you are hearing, people getting credits for their offers being submitted, or negotiations that fall under terms that are, more favorable for the buyer. But I think right now it's very highly crucial to have those conversations with your spouse, with your partner, or whoever it is that you're looking to buy with, because if you're able to get creative, or if you're able to find the opportunity, I think there is deals that are, out there for you to be able to take advantage of right now.
Yeah, and even they talk about it here. They talk about like how home prices are stabilizing or rising, and even in February of this year, which is just 2 months ago now, or 2.5 months basically, is that the U.S. prices, home prices rose 3.9%. So now that doesn't necessarily vibe well with the title, which is housing market shows positive sign. I don't know if it's a positive sign that housing prices have raised in general. There are places that have declined. Yeah. So it's kind of like that average thing, right? Some are up by 5 and 10, some are down by 5 and 10. We're averaging out right around 3.9 as of February 2025. So I think as far as like looking at the long-term horizon, the idea of Newsweek being positive about the summer, I think is right. I still think it's right because people have hit this like tolerance of I'm not willing to wait any longer. And I think that's that behavioral shift we've been talking about, not just generationally where it's younger folks that are coming to the table with all their questions mostly answered, or their knowledge known in order to just do the next thing, but the optimism about it, because you do see other places, and we talked about this last week on the show. Remember we were talking about how Texas is responsible for like 15% of like new permits in the last year. It's like that's one state out of 50 that's responsible for 15% of all new permits, and then like the second largest state had like 9% was counted for like 9% of the permits. So those two alone count for nearly a quarter of all the building permits that are being made right now for upcoming housing in the next 18, 24, and 36 months.
Yeah, and I think that's why it's important to consider expanding your search parameters as well. If you see that, you have the want to buy a house, and unfortunately you can't do it in the community or the state that you want to, it doesn't mean that you can't do it. You're just not unable to do it in that exact location. That's why it's also, important to really have those hard conversations and say, hey, well, is it worth it to build our family here? Can we afford to move somewhere else for a couple of years, then come back if it all pans out great? Or if we have a strong enough plan that we believe in, that if, it works out, it allows us to then have a rental property or something to, use as a pedestal to then jump into the next thing, come back home. But I think that there is options available. And I think also just leveraging, if you're single, leveraging, getting creative and buying with other people, buying multi-unit family properties are now more popular than ever, I feel.
Yeah, no, it's certainly, and it seems like, I'm going to use the word trending just because people know what that means. Yeah. So it seems like it's a trending thing, but it's been happening for a long time. It's just that I think it was happening kind of behind the scenes. It was like behind the curtain of real estate, because most of real estate in the residential sense is people buying their first house. They're getting a single family home, or they're going from a condo to a townhome to a single family or whatever, or a single family to like a McMansion or whatever. And that's kind of like more of the, I'll say, traditional white picket fence, like tract for purchasing and stepping up into real estate. Mm-hmm. But also, at that same time, people are buying duplexes, triplexes, fourplexes, and all that. Now, it's just that there's a whole segment of the industry that's super loud and social about it, and there's classes happening. There's, like, walking tours. Now you got people doing, like, Andrew Greer doing, like, modular home stuff. It's like, boom, building a whole new community of this. Like, we're rolling them in. We're building them. They're for sale. Like, so I think that part of it is just the amplification of the visibility of it happening, but also the younger generations looking at it going, maybe this is just my route. Maybe, and I don't say like in a defeatist kind of way, like, well, okay, I guess it's going to be the only way.
Yeah.
I don't mean it that way. I mean it like this kind of optimistic, looking at the long-term time horizon of 20, 40, 60 years of adulthood going, hey, everyone around me's made the money in real estate somehow or some form of fashion, or it's one of the ways they make money. Yeah. I want in on that. What do I got to do?
Yeah, and I have a client right now who purchased a house in Colorado 2 years ago, and they moved back here. They had a kid in Colorado. They moved back here to be closer to family. And what I noticed is that he's more hesitant in buying here in San Diego, and the reason being is because it goes back to the affordability. Over there, he compares it to here, and he's like, well, it's a way different ballpark, which it is 100%. He's paying two completely different amounts of mortgages over there than what he'd pay over here. But his biggest kicker is, and what I've heard from multiple friends that are similarly in the situation, is that they aren't in a hurry but want to buy. And that's come up, multiple times as I have more conversations with people my age, because the want is there, but the want hasn't been big enough to where it overcomes the price or the monthly payment for them to actually, make the move. And I think that's a similar position for a lot of people in my demographic, where they're making a good amount of money. They're maybe over, well over six figures or decently above six figures. And they're still hesitant about, saying, hey, do I really want to get into this big commitment? But then I thought about it, and I think it's not so much being afraid of the payment, but it's more being afraid of the commitment and not having the flexibility of like, oh, I don't want to do this no more, and being able to pick your things up and go somewhere else. So I think that has a huge part in a lot of my demographic, where it's still hindering their true ability to want to go full force in buying. And it's something that I've been noticing just, discreetly.
That's interesting, because I think, and we've cited articles previously where the sentiment in general is that they're a lot more hungry than maybe some people that are more defeated.
And
let's say,
base by base case, I'm saying generalized.
Of course, absolutely. So, and it's not that they're necessarily clashes. Like, you have pockets of this in each generation. I think that what I've noticed though is that in that end of millennial Gen Z is the adaptation to being creative about how to make it happen, and being willing to do things early while you're younger. All those like house hacking things, rent a room or Airbnb part of it, or live in the one in the back and rent out the one that's in the front. Like, you live in the small one and then rent out the big one, like all that kind of stuff. I think generationally, people are more attuned to that in your generation than mine and Will's before me, just because it just wasn't a thing. But now that it is a thing and it's more like normal and acceptable, people are doing it.
And it goes in two ways. The people that get it and they understand that, they right away are buying houses that are my age, or similar to my demographic. But there's no in the middle. It's either you got it, you understand it, and you're working towards it, or you don't know, you're unsure, and you're basically unaware of what you're able to do. But then you double down and don't really make that effort to see what you're able to do and kind of get more information, or, do research that gives you more, confidence to then, make a step up in basis and say, okay, now I do want to see what it looks like talking to a real estate professional. Because I do feel a lot of us in my demographic, whether you're in the 25 years old to maybe even 35 years old, where you're in a place where you're making good money. You maybe don't have a family yet, but you aspire to have family. You have a girlfriend. You're dating around. It's been a few years, and you're at that point where you're like, well, I'm more on this side than, on the younger side of, still wanting to party, just do whatever I want and just, not care about my life in that sense. But I feel that it's coming to an age where you have to start having those conversations, because then you get too far where you're at a limbo place where you're like, is it too late for me to buy? And I had a client that was, older gentleman, 65 years old, that wanted to purchase last year, and he told us that exact. He's like, I was too caught up in moving quickly in my life, having this, doing that now I'm 65 years old and I want to buy a place, and I'm like, I'm doing everything backwards. So I think understanding that situation and personally how you decide things is going to help you also move forward and take an educated decision for your personal life.
I agree with you, and I think that this summer could be that little sweet spot for lots of people. Here at the end of the article, they were talking about what other people are saying, and one of them is even with mortgage rates remaining in the mid-sixes, home prices have shown notable resilience. True, we've seen that. And then you have the spring selling season is here, and inventory is well above year-ago levels, offering buyers plenty of options in many areas. So if you have prices that are stabilizing, and in some areas we're saying, like I just said it at the beginning of the top of this segment, 3.9% February over February. So we're 3.9% average higher than we were last year. If that trend is going to continue, even though we have more inventory on board, let's just say for the sake of argument, house prices are going to stay neutral or maybe continue going up, then waiting is only going to start costing you more money. And you might get some offset if mortgage rates come back below that 6.5, back to low sixes, high fives. That's where it doesn't matter as much if the price goes up. But if you're just trying to strike on a hot price, then this summer might be the best time.
Yeah, one of the things that I could say, if there's anything you could take away from this article and what we just talked about, is navigating the 2025 housing market requires adaptability and informed decision making.
Yeah, I like that Newsweek is our first one out the gate today, and because I like it's more optimistic, and it's not that there's pessimistic things, but we have to face some harsh realities too, which we're about to go to next. This is from CNBC. Homebuyer mortgage demand drops further as economic uncertainty roils the housing market. Now, really quick disclaimer up front. This is like week over week and week over week and month over month data. And we've had huge spikes in that when mortgage rates went down the first week of April. So just keep in mind that 4 weeks ago, when rates plummeted, the article in the following week was mortgage demand increases 40%. So just keep in mind, we're in this little window of time where just a couple weeks ago, mortgage application went through the roof because rates went through the floor. And now we have the rebalancing of that, and mortgage demand has dropped, but the rates haven't gone all the way back up to where they started from.
And I think this is why it's so crucial to monitor the monitor rates in the markets. And I'm not saying get really technical with it, but just have an idea of what's happening day in and day out and focus on the sentiment. Focus very heavily on the sentiment. The data, like you said, one day could be up, one day could be down, but ultimately what drives day in and day out, like the movement in the rates, is the sentiment. So if you're able to see what the sentiment is more like, you're going to have a better indicator of what the market's going to be doing.
Now, the thing I have issue with is that they keep going to this thing about economic uncertainty, and it's in the title of this one, and it's in the body too. And it's not that I have a beef with it because I'm just trying to be a hawk, and I'm like, oh, everything's great about the economy all the time.
Ahead.
It's not that. The issue is that, we had economic uncertainty in 2020, and then we had more economic uncertainty in 2021, and also in 2022. And you started seeing some places in the country open back up and some places that weren't, but mortgage rates were low. And our overall economic uncertainty as an entire economy was more uncertain then, even though the mortgage market was kicking butt. But now that we have I'll say normalization in economic activity because everyone's back to work in some form or fashion. We've broadly seen the businesses that were going to get shut down because of closed down, or they were going to have to shutter their doors. That's years old now. So bringing back this whole economic uncertainty thing to me in relative history is kind of nonsense.
I think it's an excuse to mask, what's happening. But the real issue is people just don't want to transact because it's too expensive for them in their personal lives, and I think that's the biggest kicker, at least for me and my point of view. You can argue all the economic uncertainty, but that has really nothing to do with the way that people are going to buy. Yeah, it affects them to a degree in their personal spendings, but that isn't determining their whole life picture. What I mean by that is that these people go in, day out, having to do certain things, pay for their bills, and that is just more of an excuse for people to say, yeah, you're right, that's why I'm not buying, and lean more into, that fear-mongering type of tactic that it gives people the idea that, hey, yeah, it is difficult, but you know what that also does, and this might be very unpopular for people to hear, it gives these outlets the ability to maneuver the story and give themselves points and credibility and kind of control the narrative in the way that benefits their point of view.
Yeah, and I think that's part of what I'm getting at here. And this isn't an attack on CNBC,
no, not at all.
But there's a timing element to this too. So
Not
just
at all.
remember, this article came out prior to the jobs report that came out on Friday. And so when the jobs report came out and jobs were better, the market started kicking butt. And so this article came out a couple days before. We're still talking about it because it's important, not because it's still in the cycle, but just, again, remember that when you're having these conversations with Brian, you're having these conversations with Will, you're having these conversations with each other as husband and wife, or friends are buying a house, or whoever the grouping of you is doing it, just remember that the economic uncertainty that's talked about at the top level doesn't necessarily come down to your specific table. And if it's not at your table, don't give it a seat at your table. That's my point. And the referencing the labor market weakness, again, you can say that 48 hours prior to the jobs report coming out, and the jobs report comes out positive. It's then maybe that was just a bad snapshot in time. Now, here's the other thing this is the clash of data. Because if there's a lot of economic uncertainty, which is more of sentiment, then why did 32% of homeowners in March that bought homes, why were they first-time homebuyers? A third. So, and that's coming up in the next segment even, because we're going to talk about that some more. But I pulled it into this comment because in March of 2025, 32% of the homes purchased were by first-time homebuyers. So if there's that much of a broad economic uncertainty, are these people fools? Is that what we're saying, that they're making a bad choice? Because I don't think they're making a bad choice.
Well, I feel that's the thing, that in real estate, it's not like you making a bad choice, because you buying a house can be a different season from somebody else buying a house, and you could have two different outcomes, which goes back to my point of, it doesn't matter when you buy. It just matters the time in your life that you buy. If it makes sense in that point, the economy is going to do whatever it wants to do. As we've seen year in, year out, years pass by, houses go up in value, houses go down in value. But nothing is able to be controlled like that unless you control what you're able to do every day in your life. So you making that decision doesn't affect the whole world.
Yeah.
It affects your personal world.
And again, the thing here too, there's another part here too, we're talking about refinance activity and how refinance activity for the average loan size for refinance is the lowest it's been in 3 months. Well, okay, that's fine, but that doesn't mean just because the market has a good week, the first week of April, doesn't mean that everyone's going to rush through the front door to refinance because they don't need to.
Yeah.
Because remember, most people that have golden handcuffs that have a 2.5, 3, 3.5, 4, 4.5, 5, it doesn't make sense for them to refinance when rates go down to 6. But someone at 7 and 8, of course it does. So again, it's the perspective and the whole understanding of what variables are at play that make this, I'm not going to say intentionally deceitful, but you have to take a step back and go, okay, why is it this way? If you're going to say that the average loan size for refinances declined to just under $290,000, the lowest in 3 months, okay, well, why is that?
Yeah.
Because most people don't need to refinance that did it in 2020 or 21 or 22, even in part of 2023 before rates got crazy in the fall. So if that's the case, then they don't need to refinance. We've talked about it here too. The people that have to refinance, they probably bought in the last 12 to 24 months at 7 to 7.5.
Yeah.
They're refinancing to 6.5. They probably should. And anyone who's having financial duress and they're looking to their house to come and save them or bail them out of either a financial situation, a hardship they weren't expecting, or poor spending habits, and they just need to let the house pull some weight on there too and then correct their behavior and spending. We see a lot of that with cash outs and HELOCs too. So I'm not mad about it. I'm just asking everyone to please remember that all these things are at play when you start seeing things like this.
Yeah, and for me, finishing thoughts on this is data and numbers can only help you out so much, but it's understanding your decision making, the psychology of how you buy certain things and how you are willing to, spend your money. I think that's what's more crucial right now in transacting is understanding your behaviors, understanding why you buy what you buy and what's the reason for you buying it, because the numbers, data, that's going to overwhelm you. Focus on what matters to you. Why are you buying this house? What does it mean for you? The numbers and the data, if you get caught up in that, you're never going to buy. You're going to be hesitant and never actually pull the trigger because you're waiting your decision on something that's moving every day.
Yep, and the home buyer demand dropping is, I think, just a snapshot in time. The first segment of today's show was talking about how the summer might be a great time to buy. I still think so, not because I'm in on this side of the table. It's just that I think that all the variables are aligning that the summer is going to be good for people. If prices stay where they're at, even if they mildly increase a little bit in certain parts of the country, at the same time that mortgage rates stay or go lower, and inventory is a lot higher this year than last year, there's going to be some deals to be had. And remember a couple weeks ago we talked about that dude Brian, not you Brian, the other Brian that was referenced in the article. Yeah. That fool's ready, and so his offer went to the top of the stack, and he got his offer accepted with concessions, with a little mild price reduction because the dude was ready. So it might actually work out to your favor if some home buyers self-select out at the same time the inventory is high and you're ready. That's the way I see it.
Yeah, I think it's definitely a market for people that are committed, ready, and they actually have the true commitment.
Yeah, this one's good. So we're going to go right to MarketWatch, where housing market stalls as homeowners struggle to sell. We're really bleeding is the headline. I just, they have this old saying in news, if it bleeds, it leads. In this case, they literally used that word. The pace of home sales was the slowest for the month of March since 2009 during the depths of the global financial crisis. This is a really far stretch. I understand what they're saying. Gosh, it's really convenient to look past recent history of 2020, isn't it? Yeah. Again, it's not that it's wrong. It's just that's a very far step back 16 years ago to something that was extremely catastrophic on so many layers of other industries as well, including insurance and financial planning and global markets and beyond just real estate. So anyhow, I don't know that homeowners are struggling to sell. I get the argument. I understand the title. And again, they're talking about the pace of sales that has slowed down and is compared to economists who were surveyed's expectations. So the actual change in homes annualized has only gone down by a fraction of a percent. So I'm going to tell you what it is right now, numbers wise, and someone could do the math in the comment box. Okay. So the annualized pace of home sales was 4.13 million for March. So at the March reading of 2025, the estimation is that we'd have 4.13 million homes sold in 2025. The number, Brian, has gone all the way down to 4.02. A change of 0.11, right? Now, it's not 0.11%. I'm sorry. It's actually 110,000. Okay. So from 4,130,000 to 4,020,000. Statistically negligible. But look at the headline, you'd think otherwise.
Yeah, I think instead of saying we're bleeding or we're struggling, it's just taking a little bit longer.
And here's the other thing, too. That doesn't mean that, like, by the time the summer comes around or fall, whatever's happening with tariffs, whatever's happening with jobs, whatever's happening with people's wallets and pocketbooks independently and individually, what if there's a resurgence? What are we going to say then? What if it's higher than 4.13 million in July or August and it's actually 4.25? You know, maybe they can maybe MarketWatch could make a correction to their article and come back and say,
I can do that.
Yeah. So again, not to diss MarketWatch. Thank you for the article. This is great. Sellers are experiencing different problems though. In some places it's affordability and they don't have enough buyers who can afford at the price they want. So they are doing price reductions. Again, don't be afraid of a price reduction. If you're a seller, because you are broadly in a place that probably went up by 20, 30, or 40% in the last 5 years, remember that when you are listing your home, remember that when you are looking at what else is on the market, remember that when you're looking at your net sheet and how much you're going to walk away with, remember that when your net sheet might be a little lower than what you were hoping for, but you'd actually sell it sooner than you might be by waiting longer. So if you're trying to sell in 30 and 60 days, maybe the offer that's in front of you is better than the one that's at 90 and 120 to try to make that extra scratch. You might not even make it then either.
You know, one of the things that I do see is people price to sell for the biggest profit. And I think that's the wrong approach right now where they should be pricing it to sell because of the reason that these last couple of years, prices were so inflated in certain areas that it gives people the false indicator that your house might be worth what another house is worth. And I couldn't say that's furthest from the truth. Although, you know, they are used as comparables. Just because one house went up for $1 million doesn't mean your house is worth $1 million necessarily. So I believe that having, you know, the realtor that's guiding those transactions needs to be ultra clear and be very aware of what the market is doing right now. Because right off the bat, you can disqualify your property from being sold just for pricing it at an abnormally or just ridiculously range that has no comparing to what's, you know, in that range. And that right there makes you look like a jackass.
Well, yeah, that and again, aside from having to sell your house and move, like if you just want to throw it up for like some random price, that might be what you think it's worth. Yeah. That's fine that you think it's worth that. But again, if it doesn't sell and you take it off the market, great. Then you found out.
Your house,
and if someone's willing to strike at that price that you think it's great, then you're walking out the way you want. If not, and you have to sell, and there's another pressure point, such as like change of job, change of life, change of whatever, change of money, you know, you just gotta be honest about the situation. Talk to your local realtor, talk to whoever your trusted advisors are, and make some qualified choices. What I again want to steer people away from is don't bite the hook that says economic uncertainty, because they say it in this article as well. It's like the whole economic uncertainty and jobs is making people, they're using the word spooked. And it's like, yeah, okay, maybe the people who already have a default setting of being spooked about something, maybe that's who they're talking about. It's not for the people who are like gritty and who are like bearing down trying to buy a house because they know they're supposed to buy a house. They're not scared by this at all.
It's also, I mean, depends on who you ask that there's economic uncertainty, because I can make a case that in any year, in every presidency, whatever year we go back to, there's economic uncertainty.
That's true, but here's the thing, like as a mortgage company, 2025 has been better than 2024 was. And 2024 was worse than 2023 was. So if we're on let's say the reversal, the comeback, 2024 was a hard year. Everyone knows that. That's not a secret. Anyone who's telling you 2024 wasn't hard, then they probably were just like the market leader out of their entire industry. Yeah. And that's fine. There are those people, no matter whether it's an up year or a down year. My point is that if we're seeing that, we're only seeing that downstream of people's personal finances, allowing them to qualify and to buy a house or to refinance. So it's like they go hand in hand. They're symbiotic. We don't have that result unless people are having that result in their house.
And it's as silly as you could start noticing. My buddy owns a barbershop, and he tells me, hey, people stop coming to get haircuts, and they were regularly coming every 2 weeks. You know, now it's a month and a little bit longer at times. So it goes to that low of level where you start noticing like, hey, there's a slowdown a slowdown across the board.
Yeah.
But I think it comes in waves. When it slows down for a lot of people, and then it picks right back up.
Yeah, and it's specific. Like if I'm going to stop them, and this is dumb that I'm talking about haircuts because I don't have any, but the point is if I'm going to stop spending, let's say $50 on a haircut, but I'm still continuing to spend $50 on coffee, I could just be spending that money in another area that I could be getting a haircut.
Yeah.
Right. So it's I don't want to say it's relative because that's too vague, but it is. Like if I got to put gas on my car, that's a different situation.
Yeah.
If I'm just foregoing a dinner, that's different. Like I don't got to go out to that place.
Yeah.
I can cook at home and then I can get my hair cut. So again, it's preferences to a degree.
Yeah.
At large, though, if we're having a better 2025 with more people buying homes and refinancing than in 2024, then it is a reflection of the market in a positive way, not this uncertainty way. And again, that uncertainty could change when the whole 90-day tariff pause thing is over in July and that. But again, I don't even know how specific that's hitting everyone right now and will in these next couple of months. Then it's being pontificated and estimated that it will, because if the conversations are active and changing day by day, then so should the information that we're relying on to call this good or bad.
And that's why I encourage people just to stay vigilant on what's happening. You don't have to understand everything, but just have some one foot in, one foot out, and just have someone on your corner that could break everything down for you in a, hey, well, what does this mean for me?
Yeah.
Because this what it means for the economy, but what does it mean for me, my situation, and my future goals of wanting to buy, sell, refinance, whatever it might be? That's the question you should be asking, not hiding behind that and saying, economic uncertainty, that's why I'm probably not buying it. I don't know what's happening. Mm-hmm. Break it down and actually play it out for what it means in your life.
So what's funny is that they say this article, the headline, right?
Yeah.
And then deeper in the article, you see house hunters continue to be dogged by affordability challenges, but the median home price for an existing home in March was $403,700, the NAR said, which is an all-time high for that month. Prices increased by 2.7% nationally. Then you skip down, home prices in March jumped the most in the Northeast by 7.7%. The region is typically a more supply-constrained market. The median price of an existing home in the Northeast was $468,000. So you say one thing out of one side of your mouth, you say the other with the data on the other side of the mouth. Nationally, 21% of homes were sold above list price, which was unchanged from the month before. So it actually didn't get worse February to March on the selling above list price, because 21% still did. And this is where I pulled the number earlier. 32% of homes in March were sold to first-time buyers. So again, are these people stupid or are they hungry and gritty? I think it's hungry and gritty, but there it is. And all cash purchases made up 26% of sales. So even people that are not needing to qualify for a mortgage with us, they're like, oh yeah, I believe in the market, I'm buying. And 26% of the sales were with people using all cash. It's hard to see that and stand behind that. Again, I don't know who wrote this one, but it's hard to say both sides of that and be convicting about it when there's a lot of fear entering in the conversation, but the data doesn't back it up.
For me, sometimes I get lost in between all the data, and I just feel like it's too much because we're seeing data come in, day out, week in, week out, but you can't really just, pinpoint anything at one given point. And I think more than anything, it's the sentiment of how they say things that controls more of how people move and react to certain things. So if they were to switch up the sentiment of how they deliver their message, and it would coordinate with the data and maybe just bring it in a little bit more pleasing way, the dynamics of how people would transact would be a lot different, because they'd have a little bit more confidence backed up by data to then make force that, hey, this makes sense. But when they give you the data and then they tell you why you shouldn't, it's kind of like, well, I don't understand. If the data is pointing one way but the sentiment's leading another way, which one should I believe? And by default, I feel people believe people, so they'll say, hey, let's go with what people are saying. At least for the majority of people. If you're analytical and you kind of like see black and white, you're like, hey. But for the most people, I feel that they trust people.
Yeah, and I guess I would say this is be careful, and I say this to us as well. Like, be careful you're not just out there hunting for confirmation bias in what you want to do.
Yeah, because you could also get that.
Because of course we can get that. Like, and we broadly get that because like, oh, you're a mortgage show. Of course you're supposed to lend money. Of course all you care about is capitalism. It's like, okay, that's not the whole. Just because we record these things, that's not the entire conversation we have off camera and in our lives. We spend every day together. We share 1 hour with you guys, okay? But the reason I'm saying this is because if you're just chasing some confirmation bias, it can lead you down the wrong path depending on what you're chasing.
Yeah.
If you're going to look at the data and you're going to look at, okay, well, the headline says one thing. Usually the real headline or the real like strand of the story is the last paragraph. Like read the headline, jump to the last paragraph. You'll usually see something there that like kind of says it. And you look at the middle section too. If you're not going to read the whole thing, put it in ChatGPT and tell it to summarize it. There you go. That's an idea for you.
That's a good one.
But look at the title, look at the midsection, and look at the last paragraph. That'll usually give you something to
First
go.
and last, right?
To go on. Yeah,
All
first
right,
and
cool.
last, right? Yeah, first and last. It's also due for rent. No, but the reason I say that is because, yes, it's easy even for us to go, oh, yeah, well, of course that makes sense. And I say that a lot. But when you look at the long enough trajectory of what we've talked about and what the numbers support and the difference between how things are presented versus how they're actually recorded, there are differences and you need to be aware. Yeah,
I agree.
Okay, Brian, so we're going to try to help some sellers here from the buyer side of the table, okay? So this is from Realtor.com, and the lead line here is 3 roadblocks holding you back from selling your home fast. Number 1 is overpricing. Number 2 is curb appeal. And number 3 is personalized decor. Now, from our experience, well, mostly yours, my experience is age is old now, but, do you think that these are the top 3 things that are keeping sellers from getting their houses bought by the buyers that you are doing loans for?
I think the personalized decor is really just, probably somebody that is very nitpicky. I think it comes down to for that one, the negotiations that are being provided. I think that's going to be a more important one, at least from the point of view that I've been experiencing.
Are you talking about negotiations of price, concessions, both? What are you talking? What do you mean that?
Concessions.
Okay, why?
Because buyers now know that there's credits out there. And when they go and see a house, the buyers that I talk to, are they offering credits? What are they offering? Not just, hey, they're selling, we want to buy their house. Buyers are now in tune to know that they can get something from the seller that's going to benefit them or help them, have an easier transaction. So I think that if your house isn't priced right, and then it goes down, if it doesn't look right, if the negotiations are right, then you're really kind of putting yourself in a, C, D range for, I'd say great for your property, right? But if you're pricing it to sell at a competitive range, you have a good curb appeal where your house is not falling down and you believe that it's still worth $1 million because the one down the street did so as well. And you say, hey, I'm willing to play ball with the buyer and make it, feasible for them to want to buy my house and get into it in the first couple of years. I think if you have a strong 3 of those, then I think you're positioning yourself for your house to sell at a favorable price and in a way that everyone walks away getting what they want.
I think a lot of this has to do with your agency representation. I mean, 100%, right? So on the listing side, obviously there's things you're going to want to do. What?
I was going to say one more just because
go ahead, say it.
I brought it up earlier. And the realtor that you go with, there's great realtors, there's okay realtors, there's novice realtors, and there's brand new realtors, just like doctors, engineers, so on. Make sure that the realtor or professional team you decide to go with has a proven record. They're well known, and they're trying to be local and not viral. And what I mean by that is that they're actually playing ball in their own backyard, looking to really help the people in their community and not just out there putting on a show for other industry members to give them their roses and praise. That's just my point of view.
Hey, that's a dime right there, dude. I have one question. Did you mean to say novice?
Novice, yeah.
Is that your first time using that word?
Yeah, I'm trying out new words, guys.
I love it. You're the best, bro. Okay, listen, this is what I was going to say about agents. So on both sides of the deal, you got your listing agent. So yeah, put your best foot forward. Get the house ready. Curb appeal matters. Price it right. Look at the comps. See what else is on the market. Look what's sold recently. Be honest with your seller. On the buyer side, same thing. Like, look, don't be coming in with some like 20% haircut on the price and asking for concessions if the market and the comps and what's sold there is not in line with that. Yeah. So like just I don't want to say do the right job, but like be real about what's happening, because your job is to represent the side of the deal that you're sitting on, right? We know that, but also like there are cases where you can't. I'm going to use my sister-in-law as an example. There's cases where you just can't make that dog do nothing. And she had this listing that was a hoarder home.
The fire
one? It had a fire in it. It was completely destroyed. It was basically red tag condemned. And the houses in the area are selling for $800, $900. This dog went for like, I think $500 or $600 something because it needed $200,000, $250,000 of work and some participation with the city along the way to even get it sold and close escrow so that the buyer could come in and do the work. It was a mess, but then that's an outlier. I know that. But so the roadblock was the condition of the house. Yeah. It wasn't the neighborhood. It wasn't nothing. It was just the condition of the house. But and I only mention that just because, I think there's something to, you have to get the pricing right. Yes. You got to make it look the best it can. But in some cases, man, that thing's just nasty and it's gross. But that's where the money is, man. Our friend Miguel Contreras says it all the time. You make your money when you buy the real estate, not when you sell it. And you make it when you buy it. You collect it when you sell it.
And you also can't embody the mindset that your house is worth what it could potentially be worth after that value, because although that is true, it isn't true in that moment. So
if you're an investor, make that argument.
Yeah,
you can go to the table and make a deal like that. But if that's not the case, then
no, not at all. And somebody has to see the value in that. So I mean, unless they see it, you're not gonna get that.
Yeah. Well, good to wrap on that one. I know it's kind of a little bit of a short segment. We don't normally talk about sellers a lot, but sellers, you guys broadly know what you're doing, but just be aware of the competition, what the factors are that are facing you in the market. That's what I would say.
I think they don't know what they're doing, and that's okay. That's why, you have professionals that help you out so that you can then make the best decision, and you do know and you are aware.
Yeah.
So there's nothing wrong with that, and I'm not saying that in a negative way. It's just that your job is not to be a real estate professional day in and day out. Therefore, your view is going to be a lot different than what it should be.
Yeah, good. So, Brian, what was your favorite part of the show today?
I think the first article, it's refreshing to have those types of point of views and give a little bit more of a positive outlook. Although, sometimes data and sentiment kind of collide. I think if you're able to really read in between the lines and just, not take it broadly, but take it to your own situation and your own life examples, then I think you can take a lot from what's happening, and don't go and put a big, one size fits all on you. That's not what it is around here. And especially right now, you need to be more critical, more detailed, and you need to just be ready, prepared, because things are moving quickly.
I agree. The top article is for me today too. I definitely think that the summer is going to show some signs of optimism. I'd say remain vigilant, be flexible, stay nimble, be ready, be prepared, and then strike on the one you want, because you will be in the market with someone else who's just as hungry and maybe even more hungry than you, and you don't want to be in that situation where they're more hungry. But if you are, your tenacity is actually what's going to prevail in the end. Yeah. So, the fact that some of the variables add up to the argument that there's optimism for the summer, and some of the variables contradict that. That's okay. Again, your personal situation is what needs to prevail in all of this. So just be mindful of that as you do your house hunting this summer. So, Brian, thank you for another great show. Thank you all for watching. Remember to like this video, subscribe to the channel, turn on notifications so that every time we drop a new video, you hear about it first. And then I hope we have Will back next week. If he does, maybe we'll be able to flash up some pictures with him and Tanya and the new baby. That would be awesome. So thank you guys. If you want to congratulate Will, Tanya, and the family, put a comment below. We'll share it with them so they can see it and welcome their first grandson. Oh man, the name lives on. Another little guy joins the clan here at Mortgage Heroes. So, Brian, thanks for a great show. Thank you all for watching. We'll see you again next week.
Later, guys.
So if you enjoyed this video and got value from it, subscribe right here. And if you want to watch another video, click right here.